Welcome back, YouTube. So we got some interesting things to talk about today. The first thing I want to say, if you did not watch my last video, we are talking about the support levels and how aggressive we would be as far as for a bounce back and what would need to happen if we needed to, if we're going to have that push down. But obviously we're looking at these candles here, and I was pointing out the wicks were a lot longer. So we're putting out some strong resistance here. And typically that's an indicator, which is what we've done 100% of the time in this trend is the market is not necessarily ready to go into like peak bull run status, like absolute parabolic movement, but the market is saying Dogecoin is worth no less than 15 cents. And we have evidence of that because we can look at what happens every time it tries to get pushed down here, right? We have these strong wicks of resistance here where it gets pushed up, and then we have a very powerful rally. Here we had this push down here to around 13 cents, and what happened? It was immediately bought up and we closed at 15 cents. Here we had this push down here over a couple of days, and then we had this huge engulfing candle and back to 15 cents again. Same thing here. These strong push downs, these strong rallies here from around 12 cents, ended up closing at 14. The next day ran to 18. Big push down here to around 12.90, but where did we close? Back at 15. So this is one of the things that I was saying that when I know some people are like, oh, you said Doge doesn't close below 15, and we had some days where it did close below 15. And you do have to kind of couple the things as far as for like a Bitcoin sell-off, macro events. There's always something that can get it down, a whale selling. But if you look at the trend, you have very strong evidence that Dogecoin, the market is saying Dogecoin is worth no less than 15. And you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, at least 11 examples in the last month and a half of that to be true. So, again, take a look. The charts aren't God, but you can take a look at that and at least put some evidence behind your before your feelings, so that way you can make some educated decisions here, but versus based off of looking at price action and making decisions based off how you feel about it. So like I said, 15 cents is doing absolutely wonderful. We're hovering over 16 cents now. We did get up to around 17 cents earlier. Closing in this zone is absolutely wonderful. We have, in the last 2 days, we've made up, let's see, about 4 days. I say about the last 2 days, we've made up around like the last week of the downtrend. We certainly made that up. Now, what can signal that we can have here, because we do have the 14-day below the 72. So if we hover at these lines here, at this point here, somewhere between like 16, 17 cents, what we're going to have here is another cross of the 14 and the 72. So that technically is a very huge indicator. It has been for Doge on the bullish side, right? On the bearish side, it does technically, you can have a indicator. We do get a downtrend, but like here, let's go back and take a look here. You'll see like the 14 crossing the 72, we kind of flatline, but when the 14 crossed it to the positive side, we absolutely soared. So what does this mean? The last time we had a cross of the 14 to 72, we went from 8 cents to around 22 cents, right? So last time we pretty much tripled the price action from the last time where we had this cross. So what does this mean here? If that cycle is to repeat and we're at around 15 cents, that means that this run here, if we have a 21 crossing the 72, that would put us in trajectory to have a run from around 15 to around 45 cents before we start seeing that big push down. So that'll be a very interesting cycle there. And remember, it's not smooth. It's not all one big swooping motion. It's just something to kind of put out there. We'll see how it plays out, but that is a very interesting thing. And this is what I meant by the cycle is 18 months, because the longer you stay in there, you're going to start to see trends, how they're going to form out, the time frames for these trends, and you'll be able to kind of get some really good insight as far as for what to expect, some target numbers, because the cycles rhyme from cycle to cycle, but it's never exactly the same. And as we get these numbers, we can start comparing them, saying, hey, last time this happened, this happened. We get some evidence that is more relevant to this particular cycle versus just what happened in 2020 and 2016. But obviously that happens as we progress. So that's something you kind of have to do as you're moving through the cycle. But overall, that is very, very bullish here, that what we're seeing. Let's take a look here at, I want to flip over to coin market cap. Just for those of you that were, I know I was making fun of the bears on, matter of fact, let's take a look at shorts real quick. I know I was making fun of the bears on the thumbnail, but you have to, if you see the comments, they celebrate every time it goes down, and then they go into hiding when you're on the rally. Like it happens historically. So right now you have, I know the candle's green. That's technically because they're still up overall, but this wick is them running, right? So if you don't know how to read candles, even though this candle is green, this wick is them coming out of that position, right? So they can still, as long as they're up on the overall on the day, the candle will be green. But the longer this wick is, the more they're coming out of that position. So this is about, if you're talking about the daily, we're looking at roughly 55% of the people that were going to take shorts today are now changing their mind and they're coming out. So even though the candle is green, that's not necessarily saying that they're piling in. They're changing their mind. And obviously, this is a live candle, so we'll see where they close. But they are coming out of the shorts now because historically what happens when we go on these runs, we'll see things like this here. This was the biggest time where shorts got wrecked right here. And then we had a smaller one, and then we had like a lot of back and forth motion. Haven't really had anyone get wrecked to the short side or the long side since this run here. But this was back in early March. This was one of the nastiest ones I've seen because it was almost immediate, and they literally had to run out of there. So the house was on fire and they had to get out. So let's go to coin market cap because I want to talk about divergence and convergence. Give me one sec here. We're going to switch over. Make sure that's popping up nice. Okay, perfect. So the biggest thing is we're still in neutral territory where we're headed back toward greed, but we're still in neutral territory. The biggest thing that I was talking about, especially for those of you that were saying, okay, well, isn't Dogecoin getting like a less allocation of the percentage of, like, whether it be institutional money or hype or whatever you want to call it? Because I know you can't. This trend is more so comparable to 2016 than 2020, just from the hype perspective and the Elon perspective, the Elon factor, really. But the overall trend is being the same as far as because there is not any divergence just yet. So what do I mean by that? Or for those of you who haven't been here, what I do is I look at the 7-day charts here. You can do this in TradingView or whatever stock chart platform that you're using, but I typically do this here because they're all laid out and they're in order as far as the market cap. So it's really convenient and it's free. So that way you guys can use it as well. But what I'm looking for is some of the major coins. I'm looking to say, okay, what is Bitcoin, Ethereum doing? How does that graph look as far as for money? Because it's not necessarily about the amount of money that's coming in, but it's the when the money is coming in and when it's coming out, right? Because obviously Bitcoin is going to have more money in it than Doge, but I'm more so looking at the timing and the frequency versus the amount. So what I'm looking at is making sure these charts add up. Look very similar, and there isn't much of a divergence. So you can see it being similar here, Bitcoin, Ethereum. Sometimes Bitcoin can have more than more capital coming in, but again, it's not the amount. So whether or not it's red or green doesn't mean as much as if it looks very similar. So what I'm doing is I'm comparing that, and I'm looking at this chart here. Now, obviously, Doge and Timecoin, they're being a little bit more aggressive because if you look at this here, number 8 is Dogecoin, and people were saying, oh, well, Bitcoin's up. It's closer to its all-time high, and Doge isn't. That means that, and then you have to kind of factor that in and look at some of the micros here, because even on the micro factor, Doge is outperforming Bitcoin on the 1 hour, the 24-hour, and the 7-day. Bitcoin is up 0.75% on the 7-day, 2.96 on the 24-hour, and 0.24 on the 1 hour. Doge is up 0.61 on the 1 hour, 14.85% on the 24 hour, and 8.98% on the 7 day. So if you had invested in Doge and Bitcoin last week, you would have made more money being in Doge than you would have on Bitcoin. So that's another thing you have to kind of look at is price, because one of the things that's going to happen after this run, especially with Bitcoin and some of these higher price tokens and coins, you're going to look at the law of diminishing returns. It's going to take a lot more money to move Bitcoin from 200,000 to 400,000 than it is Doge from 20 cent to 40 cent. I mean, a lot more money. So we're talking like institutional level money there to move it so you get just 100% return. So, but that I'll save that for another video. That's something for the future. We'll get into that because I don't feel like going to war with Bitcoin maxis. And I do own Bitcoin. So before you leave any comments and try to do comparisons, I do own Bitcoin, Ethereum, coins like that. So, but it's just math. So you can not like it, but it's the truth. But we'll deal with that when it comes. Let's go back here because I want to just kind of drive home this point and give the points as far as to what would happen. So now I gave the points as far as to the upside. The downside, if we were to have one, again, this is the level here. We would need to break below this 12, 13 cent range. And I don't see that happening unless, let's go to Bitcoin here. Unless we get evidence below this marker here, this 58,000, we have to break below it with some type of conviction here. We had a push down. Again, it was bought up relatively close, and the next day we closed green, and now we're running again. So unless we get some closure below that 58 mark, I don't see us consolidating lower than that 12, 13 cent range. Obviously, we're in the uptrend now, but I'm not even thinking about something to the downside unless we get like some shocking news or something that's specific for Dogecoin, like I don't know, I guess Elon, we're not using it on X or something no more. Unless something like that happens, then right now 12, 13 cent range is our absolute bottom for now. So again, if we have for this zone, I'll say that makes that'll be a lot more better. If we have the shock factor as far as to the upside, whether that be X payments or something, then obviously we're probably going to have some probably like a parabolic movement, like what happened when Elon purchased Twitter, and then it rallied over like 100% in that same day. So I know some people have been asking about that. I can't chart hype. I really can't. That if I can give you my opinion on what it would do, but that would just be pure speculation, and I typically try and stay away from that. But it would be a crazy move to the upside, to say the least. I can say that. But right now we're doing absolutely great. The biggest thing that we're going to factor as far as going into that next leg is going to be the 14 crossing the 72. The last time this happened, we rallied over 300%, right? So this is a really a big deal here. It's something we're going to have to watch over the next week because that would put us around 45 cent. So I think that'll be a really good marker for going into the next leg of this bull run here. But still, the biggest things that we have to kind of worry about now in the short term are going to be that 18 to 22 range. Those numbers are still very real. Those points of resistance are still very real. So we'll look to see how this trend goes. Where we close today is going to be very important. And at that point, we'll start talking about retesting, doing some time frames for that. So if you found value in this video, please let me know in the comment section. Please subscribe to the channel. We're going to do our best to beat Bitcoin to 100,000 by getting 100,000 subscribers first. If you have found value, you can certainly help with that and by subscribing to the channel. Leave me a comment. I appreciate all of you, and I will see you guys in the next one.